Hi everyone, this is Naz here with the Nazia Malik Real Estate Group. I have someone to introduce you to today. This is Marita Talbot, and she's a mortgage agent with Simpson & Associates Dominion Lending Centers. And today we are going to discuss what lenders are looking for when it comes to qualifying for a mortgage. But before we get started, Marita, can you tell us a little bit about yourself?
Yes. Hi, Nazia. How are you?
Good, thank you.
Thank you for having me and introducing me. So I am a mortgage agent. As you said, I've been a mortgage agent for 12 years. Before that, I was in the bank for another 12 years. So I've got a lot of lending experience within this field, and I am, there to just help people with their financing needs for when they're making that big purchase.
Okay, Marita, so can you break it down for us? Can you let us know what are lenders looking for when it comes to qualifying for a mortgage?
Yes, so there's some important key facts that lenders are looking for when you are applying for a mortgage. A, are you employed? It's very important that you have employment because you need to be able to pay your mortgage every month. So employment is very important. You need to have a 3-year history for employment. Be able to provide an income statement, an employment letter, pay stub, and sometimes your T4s and taxes.
Can I ask you, so you said a 3-year average for employment. What if someone is at their place of employment for like 6 months, but it's a permanent position?
Great question. So as long as you can provide a 3-year history, or if you're fresh out of school, let's say you've just graduated from university, college, and now you're working in your professional field that you went to study for, as long as you can supply a letter from your employer that states your hours are guaranteed and that you're not on probation.
Okay, and what about self-employment? How does that factor in?
So if you are self-employed, a lender wants to see a 2-year history of your income. They want to see that you're averaging around the same income intake year over year. If there's a 20% variance or more, then they're going to take the lesser of 2 years, and you will need to provide your full T1 generals.
Lastly, part-time employment. I've had clients ask me if their part-time employment qualifies for a mortgage approval. So can that factor in?
Part-time employment is okay as long as you've been in the same industry for 2 years. A lender will want to see that you have guaranteed hours. So the hourly wage is going to be based on your guaranteed hours, and that your employment is consistent for 2 years. If it's not consistent, if you have a different employer, then is it in the same industry? But it's very important because they will take an average of the 2 years. So if you tell me that your income is based on 40 hours a week, but your pay stub shows 20 hours, then 30 hours, that's why it's important to have a matching employer letter. Say this person is guaranteed 30 hours per week at $20 an hour.
Okay. Marita, we all know that your credit score plays a huge factor when it comes to getting pre-approved for a mortgage. So can you tell me what is the minimum credit score that lenders are looking for a typical A lender mortgage?
For sure, absolutely. So a typical A lender, your credit score needs to be about 680. Minimum 680 and higher.
Yeah, that's what I tell my clients.
There are some lenders that will let you go down to as low as 650.
Okay.
But typically 680 is where your credit score should be.
Tell us about down payment. What are the minimum requirements?
Yes, so the minimum down payment requirement is 5%. That is called, in the lending world, we call that a high ratio mortgage. Okay. Anything less than 20% down is high ratio and requires default insurance. If you have more than 20% as a down payment, your loan is considered insurable. And that means your pricing and rate can change depending on how much more than 20% of a down payment you have.
Okay, so what is the difference between insurable and high ratio?
Good question. So high ratio means you have less than 20% down and you have to pay the default insurance. So we have CMHC, Canada Guarantee, or Sagen Insurance. Those are our 3 default insurers that we have in Canada. If you have more than 20% as a down payment, your loan is insurable, meaning you're putting more into the loan. You are less of a risk than if you are a high ratio. So the lender pays the insurance. So it's considered insurable.
Oh, okay.
This is all based on a 25-year amortization.
Okay, so leave us with some key takeaways that you want to tell people if they are going or if they are in the process of getting a mortgage approval.
Some key takeaways. First off, don't take out any new loans if you're looking to make a purchase because you want to keep that room available in your debt servicing. Don't change your job because that is crucial. Keep a 3% balance on your credit cards.
Okay.
And definitely pay the minimum payment.
Yes, yes, yes. And I always tell my clients, don't close any credit accounts that you have.
Right.
Yeah.
It's actually good to have credit and show that your lenders that you have good payment history.
Yes, yes. I always tell my clients that. Oh, what about co-signing?
Oh, definitely. You do not want to co-sign for any loans while you're in the process of going for your own mortgage pre-approval because that will take away from your debt servicing. Even though you don't think you're on the hook for that loan, it's not. It is taking away from your debt servicing and your purchasing power.
Okay. Okay, yes. I always tell my clients if you're in the middle of getting a pre-approval, do not co-sign for anybody for any loans. Okay, Marita, well, thank you so much for joining us today. It was a pleasure having you. Guys, we will be doing many more videos like this regarding the financing end when it comes to purchasing a home. Now, if there are any topics that you would like for us to cover, then just DM us or leave a comment in the comment section below, and we will do our best to answer any questions that you guys may have. So if someone's looking to obtain a mortgage approval and they want to get a hold of you, what's the best way to contact you?
Go to my website, maritatalbot.com, and we'll leave my contact details below as well.
Okay guys, so that wraps it up for this video. Remember, whether you're looking to buy or sell a home, or even if you'd like more information about today's real estate market, contact us today. And for more videos like this, be sure to like and follow. This is Naz with the Nazia Malik Real Estate Group. Your home sold guaranteed, or we'll buy it. See you soon.